You want to understand money and grow your wealth? You're in the right place. Welcome to DollarSmart Lab, where we simplify personal finance and investing.
Everyone tells you that you should be investing. It's like this constant background noise, right? The smart thing to do, the responsible thing. But the second you decide to actually do it, you're hit with this wall of noise, just a tangled mess of buzzwords and totally conflicting advice. It's enough to make anyone give up. So today, we're going to cut right through all of that. Let's just dive in. For most people who are just starting out, the journey kind of stops before it even gets going. You hear so much advice from so many directions that you just freeze. It's called analysis paralysis. You're so scared of making the wrong move that you end up making no move at all. So let's just tackle some of the biggest questions head on. Okay, so you hear about the crypto millionaires, right? You see the headlines, and it is super tempting. You start thinking, man, this is the future. I should just go all in. It really does feel like a shortcut to getting rich.
Yeah, that's going to be a hard no. And here's why. For every wild success story you hear about, there are tons of other people who've lost, well, everything. That kind of up and down volatility isn't really an investment strategy, it's more of a gamble. And that's not where you want to start.
All right, fine. Crypto is too wild. What about something you can actually touch? Something solid, like property. I mean, everyone says real estate is a safe bet, right? A classic way to build wealth. And again, the advice is to hold off on putting all your money there. Think about it. A rental property with no one living in it, that's not an investment. That's a money pit. You're still paying the mortgage, the taxes, the repairs, and there's zero income coming in to cover it. Okay, so let's just go with the most classic option. I'll pick a few really good companies, buy their stock and just watch it go up. I mean, how could that possibly go wrong? And you guessed it, that's not the recommended path either, because even the absolute best companies can get hammered when the whole market takes a downturn. Putting all your eggs in just one or two stock baskets is just way too risky. At this point, you're probably ready to just throw your hands up, right? Bitcoin's too crazy, real estate is a risk, individual stocks can crash. It really feels like every single door is a dead end. But this is where the whole strategy flips on its head. See, the answer isn't about finding that one single perfect investment. It's something that sounds kind of weird at first, but is way more powerful and actually surprisingly simple. Here it is. This is the big idea. You should invest in everything. I know, that sounds totally impossible and maybe a little crazy, but it is the core of a strategy that works incredibly well for beginners and seasoned pros. So what does investing in everything really mean? It means building a diversified portfolio. It's the ultimate don't put all your eggs in one basket strategy. The goal is to spread your money out so if one company or one sector has a bad year, it doesn't sink your entire ship. The other parts can help balance it out. But how can one person, a normal person, possibly invest in everything? You don't have to go out and buy thousands of individual stocks, thank goodness. The solution is something called index investing, and it is the absolute key to getting all that diversification instantly. So let's get even more specific. A fantastic way to start with index investing is to focus on a big, major market index, something like the S&P 500. It basically represents the 500 biggest companies in the US. And just take a look at this. This chart shows the performance of the S&P 500 over the last 5 years. We're talking a 94% return. That's the power of this strategy. You're not trying to be a genius and outsmart the market. You're just getting a piece of its overall growth. Now, the magic tool that makes all this possible is called an ETF, which stands for Exchange Traded Fund. The easiest way to think about it is like a shopping basket. You buy just one thing, the ETF, but inside that basket are tiny little pieces of hundreds of different companies. It is the ultimate shortcut to diversification. Okay, so you're ready to invest in the S&P 500. Great. Let's just quickly compare two of the most popular ETFs out there that track this index, just so you can see what you're looking for. So here we have VOO and SPY. Now, if you look at their 5-year returns, they're practically identical. So what's the difference? It's that expense ratio. That's the fee. VOO charges just 0.03%. That means for every $10,000 you invest, you're only paying about $3 a year in fees. That tiny difference really adds up over time. And what are you actually buying with an ETF like VOO? Well, you're buying a tiny piece of the biggest companies in the world. Companies you know, like Apple, Microsoft, Amazon. These are businesses you probably interact with every single day. So you know what to buy, you know why you're buying it. Now for the last piece of the puzzle,
the how. And this is the part that seems intimidating, but I promise you, it is the easiest part of this entire process. Okay, first things first, you need a place to actually buy and hold your investments. You can open up an account like a Roth IRA at any of the big brokerages. Think Vanguard, Schwab, or Fidelity. This honestly takes about 5 minutes to do online. Once your account has money in it, buying is this simple. Number 1, you search for the ticker symbol, so you type in VOO. 2, you click buy. 3, you type in how many shares you want. And 4, you review it and click place order. That is literally it. And just like that, you've done it. You are officially an investor. See? It's not some complicated secret code. It's just a few simple steps that you now know exactly how to take. So let's just do a quick recap. We went from feeling totally overwhelmed to having a super clear plan. You now get the why, which is diversification, and you get the how, which is using a simple ETF to buy the whole market. You've really just unlocked the first level of investing. You've got the knowledge, you've got the practical steps. But of course, this leads to the next big question that every single investor has to ask themselves. With the market always going up and down, when is the right time to actually hit that buy button?
DollarSmart Lab. Think smart. Grow rich.